Hello traders, hello traders. The title of the video is First Elliott Wave Fibonacci Projections Explained. Alright, this is the continuation of the video that we titled How to Train First Elliott Wave and Fibonacci. Check out that video before watching this so you may understand everything, because the format that I'm using now is that in that video, we were talking about the theory. So I will record like a 2 minute video or 3 minute video or less than 2 minute video when I will talk about the theory. And then in the next tutorial, I will demonstrate to traders the theory. So the video that I'm mentioning here, how to trade the first Elliott wave and Fibonacci, is about the theory that is relating to this practical Elliott wave tutorial. All right. So this is the format I want to use now when I record a short form tutorial, 2 to 3 minutes, giving traders, okay, very fast the theory, and then the next tutorial that is relating to that theoretical tutorial, I will be demonstrating to traders what I meant by all those blah, 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 blah. All right. So check it out. All right. So first Elliott wave Fibonacci projection explained. All right. So in that tutorial, which I have already mentioned, which I'm not going to mention again, I was telling traders that we can use, okay, the internal waves, okay, of the first wave, talking about Fibonacci retracement of the second minor wave of the first wave itself, and also the Fibonacci retracement of the fourth minor wave of the first wave, all right, to forecast the real second wave, the real fourth wave. I don't want to push it a bit too much because we can use, in fact, the structure, the Fibonacci structure, talking about the retracement of the second minor wave or the first wave, fourth minor wave or the first wave, or we can use the Fibonacci structure of those of second and fourth minor wave or the first wave to forecast any corrective way that may take place in the future, talking about the lower degree all the way to the higher degree. So like here, you can see that we counted 1, 2, 3, 4, 5. Feel free to disagree with my way count. That 1, 2, 3, 4, 5 is an impulse wave, is a multi-wave. It become one. So that those 1, 2, 3, 4, 5 become one wave, one an impulse wave of a higher degree. All right. So now, other trader may say this is a trending phase. Good. That corrective phase, okay, of this trending phase will become the second wave of a higher degree. This is a nice one. You see, stop on a moving average 100. Now, traders at TSCW 24. Now you understand why we use the moving average 50 and 100. All right. All right. So this is a second wave of a higher degree. So some traders already know this, but I'm telling you, please stay with us as I'm going to go a little bit deeper. So what traders are doing very often, what most Elliott traders are doing very often, they are limiting themselves. So they will only use the structure of the second minor wave or the first wave to forecast, okay, the corrective phase, talking about the Fibonacci structure of the second minor wave or the first wave. We are talking about Fibonacci retracement. But what I'm recommending to 2-4 Elliott wave traders is to use both the Fibonacci structure of the second minor wave and the fourth wave. Not only that, also to use the Fibonacci extension of the first minor wave and also of the third minor wave. So when I'm talking about Fibonacci structures, I'm talking about Fibonacci retracement and also Fibonacci extension. So you will be noticing in the next tutorial, following the same format, when I will record first a short form tutorial talking about the theory, and then I will connect it to a practical discussion like this. This is what we're going to do. I want you to understand that anytime you hear me talking about Fibonacci structures, I'm referring to both Fibonacci retracement and Fibonacci extension. So the title of the video first, Elliott wave Fibonacci projection explained. Normally, when Fibonacci traders hear the word Fibonacci projection, they are only thinking of Fibonacci extension. In this case, the Fibonacci projection, in this case, talking about this tutorial, I'm connecting it also to Fibonacci retracement. All right, very, very important point. So you don't get confused. All right. So if the first wave is extended, if the first wave is an irregular first wave, so you may say, Joe, what is an irregular first wave? Go to www.24elliott check that webpage. If the first wave, okay, is a complex first wave, and we can identify the first, second, third, fourth minor waves of the first wave, it is very, very important for us to try to analyze, not to analyze only, but to take note, to record. So the idea is to record how far was the second minor wave of the first wave in relation to the first one. How much did the fourth wave retrace to this one? Not only that, if, for instance, you have the second wave, okay, is a triangle, you want to take note. If it is a shallow zigzag, you want to know. You want to know how deep was that second minor wave, all right? Is it 61.8%? Is it 78.6%? So why are we doing all this? Why are we taking note of both Fibonacci retracement and extension? Any Fibonacci structure, this is the general rule, that will take place during the first wave is very, very important for us. Why? That's a very, very important question. You see, the beginning is the most important thing. All right. So you may disagree with what I just said now. It's very, very important. The beginning is the foundation. The roots is the foundation of the tree, yes or no? The foundation is what is supporting the whole building, all right? So you can build any fancy, okay, villa, but if the foundation is not strong, it's wrong. Everything will collapse. So when we are using the Fibonacci structure of the first wave, it will help us not only during this trending phase, all right? It will also help us during the corrective phase. But most of them will stop there. But it's a golden data. It's a highly important information that the first way is telling us. And we can use those information that we have gathered during the first wave to focus even during the higher degree wave count. For instance, so we are using it during the first wave of a higher degree. We can use it also during the third wave of a higher degree. We can use it again during the fifth wave of a higher degree. We can use it again in the corrective phase of the higher degree. So this is a trending phase and a correction of 1 degree, but we're going to have again another bigger 1, 2, 3, 4, 5 in the future that will make okay another trending phase of a higher degree plus a correction. So the cycle keep going on and on and on until we come back to the starting point again and we start again from zero. All right. So if one day the price comes back to the starting point, it means that everything else has been cancelled. We return back home. All right. We return back to the source. All right. We return back to God. All right. And we start afresh again. That's it. This is it. So we start counting again a new cycle because the price return back to the starting point. But if we keep going now, 1, 2, 3, 4, 5, correction, we will keep counting wave from 1 degree to another degree to another degree. Usually after 3 higher degree, some stock will come back down. Okay. So with the information that we have gathered during the first wave, because it's the beginning, it's the foundation, it's the roots. All right. So we want to dig into that and gather as much information that we can gather. How deep was the second wave? What is the structure of the second wave? So, for instance, if the second wave is a zigzag, so the zigzag is formed of A, B, C. How the B of that zigzag retraces the A of that zigzag. How deep was that zigzag? All right. How was the C part of the zigzag? What is the structure of the second wave? How deep it is? All right. Okay. Now, third way, how far the third way went up into relation to the extension, Fibonacci extension of the first way. All those information we are gathering them. This is not okay about exact sciences. This is about gathering information, important information, or you may say genetical information, or a financial instrument, and we can use that in the future to have a bit of idea what is likely to take place because why it has happened before. And there is nothing new in the financial market. And human beings are very good at living patterns. So as the price, you see here, all this is going on like this. You think it's just happening. There are patterns here that if you go a little bit deeper and deeper, it doesn't mean that that's exactly what will happen. You have a bit of idea, the scenario that are likely to take place because of what has happened before. We have spent a lot of time to gather those information. You see, this is it. And with that, we can work with that to improve the earlier way forecast, but also the market timing. This is it. So, like now, you see this one as I'm talking to you now. So you see here. So it's not very clear because the price they were you see just went straight up. This is not a clean cut. With sometimes you cannot see all the internal wave. Okay, if you cannot see them all, gather as much as you can. That's all. So you can only work with what you got. Practically speaking, that's it. All right. If it's not there, it's not there. If you can see something that is useful, just use it. That's it. So one can just take note and say, all right, looking at this first wave, all I see, it went up a bit funny. All right. So you may say, all right, it's a first wave that was a little bit funny. Now, some of them may say, George, I don't need all this hassle. It's too much detail for me. But yes, if this is new to you, you will think that way. But once you start practicing, start doing it, you'll be amazed how yourself, okay, you can quickly catch up with more experienced traders. This is it. So this is what we see. You see how? So this is he went up, pulled back, he went up, and then come back quickly. So this session here, for me personally, is very interesting scenario. It's a very interesting scenario. So if, for instance, in the future, I look at this talk, and because I take it, you take a, you gather this information, you keep it somewhere. Suppose you are somebody trading this financial instrument, United Rentals Incorporated, EPIC, URI, Uniform Romeo India. All right. So you may just keep that information and say, all right, we have this structure one time during the first wave. This pullback was 38.2%. This one stopped at 138.2%. This move out 138.2% Fibonacci extension level of the first section. And then you pull back again to 38.2% level. So there is a pattern that is happening. We see 38.2%, 38.2%. We are talking about Fibonacci structures. Okay, if the price did stop at 138.2%, we noted them. So for this financial instrument, we may say, watch out for 38.2% level, watch out for 138.2% level, and then here it is running away very fast. All right. So with what has happened during that specific first wave, okay, on the monthly chart, with the information that we have gathered, we can predict what can happen. That's the word. What can happen? Okay. So if somebody asks you now, what can happen? How are you going to know what can happen if you do not know what has happened before? Talking about the history or the behavior or the attitude of market participants that were trading this stock. All right. So I will be recording another tutorial and we will be talking about the second wave, the structure of the second wave. In that format, I will talk again about the theory in 2 minute or 3 minute video, and then I will come back again talking about the demonstration or the practicality of that theory. So we are not only looking at the Fibonacci retracement, we are looking at both Fibonacci retracement extension. That's how we're talking about the extension of the third wave, in relation to the first wave, and also the extension of the fifth wave in relation to the third wave. You apply Fibonacci extension to the third wave, and you want to determine the relation of the fifth wave to the third wave. You apply Fibonacci extension to the first wave. how much the second wave went down, how far the third wave went up to this level, and you can be a little bit creative. So you're not going to call. So I'm talking about the first wave now. So you gather those information. Apart from the first wave itself, you are also paying attention to the internal wave of the first wave. So this is what we are talking about. So not the first wave alone, all right, but you are paying attention to the internal wave, the Fibonacci structures of the internal wave of the first wave. You are gathering essential information that can help you to improve the Elliott wave forecast and most importantly, the market timing. All right. So now you have watched the video about the theory. Now you are watching a video about the practicality about it. If you haven't, okay, grasped everything, do not worry too much. All right. We will be recording video in the future. If you are a subscriber, you'll notice that if one day I'm talking about it, you remember quickly and you know, all right, this is what you was talking about before. Okay. Now you can see one example and it will become clearer to you. In the next tutorial, I'll be talking about the Fibonacci structure of the second wave and how to use it. All right. So all in all, we want to use the internal wave or the first wave to forecast what is likely to happen during the whole multi-wave from here all the way to the end of the fifth wave. Not only that, we are using the internal wave of that first wave to even have a bit of idea what can happen during the multi-wave of the higher degree. So this is it. One, two, all right, and then in fact, the two is somewhere here. Okay, the higher degree two is in fact here because this is a flat correction happening here. So this is the first way of a higher degree. This is a flat correction being formed here, and the second way of a higher degree will be somewhere here. So that first wave structure can help us also to have a bit of idea what can happen in a higher degree wave count. All right. The second minor wave and the fourth minor wave of the first wave can help us predict or have a bit of idea what can happen in any future corrective wave. Now, if this is something new to you, okay, as I said to traders, okay, take in the knowledge first, the theory, digest it, okay, and then, okay, think of it, give it a time, and work with it, practice, use a demo account slowly, slowly, and it may make sense to you. The warning that I have for trader is this. This is not an exact science. We are talking about probability. Something has happened before, all right? In a family, everybody is tall. The father is very tall, okay? So the firstborn is born. We can expect that it's likely to be like the father, very tall. It doesn't guarantee that he will be definitely tall. It can be short person. But if the firstborn is tall, we can expect that, all right, probably the next one also will be tall, yes or no? All right? Or if they all have a long nose, all right, it's not to poke fun of people, there's a high chance that the people born in that family may exhibit long nose, and so on and so on. So the firstborn, the first thing that has happened is very, very important. We want to gather as much information that we can. In this case, we are talking about the Fibonacci structure, talking about the Fibonacci retracement, Fibonacci extension. Not only that, the Fibonacci structures, we can even talk about Fibonacci patterns. So the internal wave of the first wave, not only that, the internal wave of the internal wave of the first wave. What are the Fibonacci structures? As much information you want to gather in order to have a bit of idea what is likely to happen in the future. Especially, this is very interesting, especially in this case here, because we have a correction in 2008. You see this stock here is laying here, and then it came out of this declining channel, forming the first wave, second wave, third wave, fourth wave, fifth wave. Now it becomes one. That structure here is a very, very important structure here. It doesn't mean that this is exactly what's going to happen, but you'll be surprised if you gather as much information as you can that can help you to make excellent decisions. The retracement that we see here, uh, I'll be talking about that in the next tutorial. So this is it, okay? If you have any question, suggestion, all right, please put in the comment section. And in due course, I will be recording another tutorial to answer your specific question. If this video has been truly useful to you, please let us know by giving us the thumbs up. If you dislike it or you hate it so much, please mark it down. That will make you feel better. All right. You hate it so much. All right. Mark it down. That will make you feel very good. All right. So you don't feel overwhelmed. Okay. Now, if you think that, George, you have made my day, all right, feel free to share it on the social media. Subscribe to our YouTube channel, 24 Elliott Waves. Be sure to click on the notification bell so anytime we record a new video, you will be the first person to be notified. More than 60% of our viewers are not subscribers, which means there are a lot of people out there that are watching our video day in, day out, but they never click on the subscription. All right. Have a YouTube account. This is the first thing that you need to have. Have a YouTube account. All right. And then either if you are using on your tablet, on your Android okay, devices, you are already logged in. So all you have to do is to click okay on the subscribe button and be sure to click on the notification bell. If you're watching on the desktop, okay, be sure to log in, all right, so you'll be able to rate it. It happened to me many times when I'm watching some of my favorite channels and I forget to log in, all right? So as I'm coming to the end of the video, I click like and YouTube is saying to me, oh, log in first. Then I will log in. This is true story. I'll log in and I'll give it a thumbs up. Yesterday, this is a true story talking about website. I was watching a video about 301 redirect. Have you ever heard about that? So I watch video on YouTube. I'm a YouTuber number one. So 301 redirect. A gentleman explained it in very clearly. I click on like. Well, I was not logged in. It was an excellent tutorial. I log back in and to give the gentleman the thumbs up, it was an excellent tutorial. All right. Sometimes I do make comment also. All right. But I keep my nose clean, meaning that I don't upset YouTube creators. So this will conclude our discussion today about first Elliott wave Fibonacci projection uh, explained. All right. In the next tutorial, I will give you okay heads up. We will be talking about all right mastering second Elliott wave Fibonacci trading tactics like a pro. Again, I'll follow the same format when I'll give you the theory in 2 to 3 minutes very fast, and then in the next relating tutorial, we'll go into the nitty-gritty of practical explanation of all the theory that I have discussed. So what I want trader to do is this. If there is a question that pop up, okay, related question. So don't say something emotional, right? Something that is relating to the video, right? That you think that I should expand on. Just leave it there. I can assure you, I always take note of everything, all right? So that I follow me know that. Take note. You think that I've forgotten, but I haven't, all right? And then one day, here we are, we'll be talking about it more. So just leave it there and leave it to me, all right? Sometimes even trader remind me again and say, John, you promised me to record a video about a copper. I'll be waiting for a month now. And then I say, all right, okay, don't worry. Let me answer the people asking me the question about Baidu first, and then I'll come back to you. You are in the queue, something like that, okay? So thank you for watching, and I will speak to you soon. See you in the next tutorial. Remember the format, theory first, and then the practical bit. That's what we're going to do, okay, in the next few days. Happy trading to you all, and I will speak to you soon. We are the TSTW 24 traders talking about first area way Fibonacci projection explained.